Today, I'm going to share with you 3 year-end tax planning strategies that, if you can incorporate them into your situation before December 31st, could save you money on your taxes this year. My name is Chris Zeches, and I'm a certified financial planner and managing partner at Zeches Wealth Management. At Zeches Wealth Management, we have one singular focus: to use our financial planning and tax expertise to help multi-generational families and business owners achieve more of what they love. In line with that focus, the purpose of these monthly videos is to give you actionable advice that may be used to improve your and your family's financial outlook. With the end of the year fast approaching, I'm going to share 3 year-end tax planning strategies that could save you money on your taxes this year. Let's get started. Strategy number 1 is to look for opportunities for tax loss harvesting. In years like this, many investors have investments in their portfolio that have lost value over the short and long term. Tax loss harvesting allows you to sell those investments that are down and capture the long-term or short-term capital losses associated with them. Now, depending on your personal tax situation, these losses can now be used to offset long or short-term capital gains that you owe. They can even be used to offset a percentage of your taxable income. Now, if you invest the proceeds into different assets, harvesting these losses also offers you a way to eliminate investments that no longer fit your portfolio or your long-term goals, or just get rid of investments that you think may have a low chance of growth. Replacing them with investments that are a better fit for your long-term goals may also give you a better chance of improved performance in the coming years. Like other strategies used to influence tax liability, tax loss harvesting is a strategy to discuss with your tax professional. They should be able to analyze your situation and your tax situation before the end of the year. Now, strategy number 2 to consider is to bundle your medical and or charitable deductions into this year. If you are expecting a higher income this year, you might consider bundling as many future deductions into 2022 as you can to offset that income. If you have lab costs, dental, or other medical expenses you can prepay this year, you could pull those deductions forward to the current year for tax purposes. If there are elective procedures you've been putting off, consider scheduling them now and pay for them before the end of the year. Now, the same goes for making charitable contributions. If you regularly donate to charities, you might consider increasing your donations this year to reduce taxes. If you plan to donate the money to the charity anyways, who wouldn't want that money to support a favorite charity instead of paying more in taxes? Alternatively, this strategy can work in reverse. If you know you will have less income this year and anticipate a higher income next year, you may want to hold off on extra giving or on additional medical expenses until the next year, when those deductions would be more beneficial to you financially. Bundling deductions can work for other types of deductions too. As always, check with your tax advisor to see if this strategy will benefit you and how to best use it to improve your situation. Now, our final strategy could be a benefit if you find yourself in a lower tax bracket for 2022, have a good number of long-term capital gains, and would like to sell or reduce your exposure in those investments. Most people are familiar with the traditional long-term capital gains tax rates of 15% and 20%, but many people don't realize that there's also a 0% rate. In order to qualify for the 0% rate, you need to have taxable income of $41,675 or below as a single, or $83,350 as a joint filer. Under this rule, because it uses taxable income, which is income after deductions, it is possible that someone could make over $100,000 and yet pay 0% in long-term gains. If you have capital gains that you want to consider taking this year, ask your tax professional to help you take a closer look to see if you qualify for this opportunity in 2022. With a creative use of deductions, you may be able to reduce your long-term capital gains taxes to as low as 0% for 2022. Now, these are just 3 of many strategies that can be deployed before the end of the year to help reduce your taxes. If you have questions that are specific to your family's situation, feel free to contact us and we will do all we can to help. Thank you for listening, and remember, we believe you can have a flexible life plan to achieve more of what you love, more financial confidence, more for your family, more freedom, more choices.